Sir, are you ready, sir?
Yes. Yes. Yeah, you can start.
All right. A warm welcome to all. Welcome to our FTP program. This is the second session of the first day. So this session will be led by Dr. T. Mallikarjunappa. And I have to say a few words regarding our honorable. Like, we are really privileged and honored to have such an eminent faculty as our resource person. So in the beginning itself, we just called him, and he was like ready. Like, what is it a working day? That's the only thing he asked, and he was very cooperative and coordinated to give us such a wonderful so it would be a wonderful session, because I have attended a few sessions of Mallikarjunappa sir back in Kanu University. So I have to say a few words about sir. Dr. T. Mallikarjunappa, he did his PhD in Management Science from the University of Mysore, and his research interest is mainly in accounting and finance. He has been an active member of the academia for the past 39 years. He started his career in 1982 as a faculty at the Department of Business and Administration in Mangalore University. He worked there until 2019, and for the past 2 years, he is working as the head of the Department of Commerce and International Business at the Central University of Kerala, Periya, Kasaragod. For 35 years, he has been continuously engaged in research, and 20 research scholars have been awarded PhD under his guidance. He is also a member of the editorial board of AAMS International Journal of Management and the Journal of Management and Public Policy. He has reviewed several papers for the journals such as AAMS International Journal of Management, the Scopus Index Journal, Asian Academy Management Journal of Accounting and Finance, the SAGE publication named Vigalpa, a Springer publication named Journal of the Indian Society for Probability and Statistics, and several other IndusScience, SAGE, and Emerald journals. In the past, he has held the charge of Chairman, Coordinator, and Director, the Department of Business Administration, Mangalore University. He has also held the charge of Dean, Faculty of Commerce in Mangalore University. He was also the Director and Secretary of Mangalore University Employees Credit Cooperative Society Limited, the Mangalore University campus. He has also held the post of Finance Officer and has been an Academic Council member and a syndicate member as well at the Mangalore University. He is also a member of the Technical Appraisal Committee, the Ministry of Minor Irrigation, Department of Irrigation, Government of Karnataka, and was also the chairman and member of various committees of Mangalore University and several other universities. He is an associate member of the Institute of Chartered Accountants of India, ICAI, Kolkata, and a lifetime member for the Indian Society for Technical Education, New Delhi. He is also a member of the Association of Indian Management Scholars, AIMS International, which is situated in the University of Houston, downtown, United States of America. In 2019, he has also been a part of the MHRD scheme on Global Initiative on Academic Network, which is known as GAN, program on contemporary finance tools, which was conducted by Professor Vikash Ramaiah in the University of South Australia. He has been granted the prestigious Erasmus Mundus Scholarship on Interdisciplinary Bridges for Indo-European Studies under the Visiting Faculty Scheme of the European Commission in 2016. He has also been a visiting scholar at the Faculty of Management at Warsaw University, Poland. And there he has designed and taught a course on modern financial markets at the postgraduate level and have conducted collaborated researches with the Dean of the Faculty of Management in the same university. He has been conferred with several awards, including 11 Best Research Paper Awards, and his publications in national and international journals and edited books in his account is over 150, along with 350 papers presented at numerous national and international seminars, conferences, and workshops. Dr. Mallikarjunappa has conducted and coordinated various programs throughout the years, and moreover, has been an invited resource person in several executive development programs, refresher courses, workshops, etc., which counts to more than 100. So I humbly welcome, representing all the Faculty of Commerce, the participants, Sri Shankara College and UGC Stride, Dr. T. Mallikarjunappa, sir, to handle the session and take over. Thank you, sir.
Yeah, thank you, Rahul, for that liberal introduction. Normally, I tell everyone who is introducing me not to take more than 2 minutes, but this time in the mail, I forgot to mention that because people would not be interested in listening to these things.
No, sir.
Anyway, thank you.
From our side, we have it. It's our privilege. Thank you, sir. Thank you.
Yes.
Please, sir.
Let me first express my gratitude to the entire community of Sri Sankara College. I have visited Sri Sankara University some time back along with Rahul's father. I came along with my wife. When I came to Cochin University of Science and Technology, I wanted to see Sri Shankaracharya Mutt, and I visited your university, and then the river where Sri Shankaracharya took the oath of becoming the saint. So it's indeed a pleasure to be with all of you, although not physically, but in the virtual platform, because virtual platforms have become the reality these days. So let me express my gratitude to the entire community of Sri Sankara College. Rahul, Gopika, head of the department, principal, IQAC coordinator, everyone who have thought that I would be able to deliver some useful talk to the participants. Maybe just for the information of the participants, here and there, I might request you to intervene and then talk certain things, because when I go on talking, some of the things may not interest you. That is number one. Then occasionally it is good to intervene in the afternoon session. If you have had sumptuous lunch, everybody tends to sleep. The best way to overcome this sleep, because it's natural tendency, is to come online and then say occasionally that you would like to add something. I would welcome. If you want to dispute what I am trying to say, you are most welcome to do this, because personal investment, the topic I have chosen is how do we analyze the financial statements for personal investment decisions. It's a very vast area. What we are trying to do is something which Jawaharlal Nehru did when he was in prisons at different intervals of time during the independence time. He wrote series of letters, and that became a book called as The Glimpses of World History. So what we are going to see today is the glimpses of what could be looked at in the financial statements of a company when you are taking investment decisions. So if somebody wants to add, sir, these are the things that you have discussed and these are the things that you have missed, can we add? You are most welcome. You can unmute. And when you are doing that, please introduce yourself because it's being recorded, I believe. Gopika, it is being recorded, right?
Yes, sir, yes.
Yeah. So since it is being recorded, please introduce yourself and also tell the institution from which you come, so that others could also know what are your interests, and in the questions you can ask the question. If I know the answer, I'll answer. If I do not know the answer, maybe somebody else in the audience can answer. If the audience and then even I do not know the answer, then some other time we will clarify these things. Okay, with that, let me come directly to my topic, financial statements. Now, how do we analyze a company, especially when you are taking the investment decisions? When you are taking investment decisions, normally we tend to say that we should analyze the companies which are listed in the stock exchange. It's not necessary that the company should be listed for taking investment decisions. Nina, if you can mute yourself, yes. This is the problem with the technology. We don't realize that, we are talking. Yes, fine. So when we are analyzing the companies, normally we tend to say that the companies which are listed are the ones which should be analyzed, but it is not necessary. Even the unlisted companies are also analyzed by various investors. If you have to analyze only the listed entities, then companies like Infosys, for a long time, for more than a decade, it was not listed. TCS was not listed for quite a long period of time. Many of the PSUs were not listed for quite a long period of time. So how do you analyze unlisted entities? At least in the listed entities, you have some indicator of the price because the price is available in the stock exchanges. For unlisted entities, price is not available in the stock exchanges. So how do we analyze these things? So we have different ways in which the financial statements can be used by an investor to find out whether that's a company which is worth investing in. One of the things that we should keep in mind is, if you ask the best companies to invest in, the best comes with a price. So it's a price that matters. What is the price at which you want to buy? That's going to determine whether it's going to be a worthy investment or not. And we should not be taken by some of the reports, because it is good to read reports, but sometimes some type of a hype is created about certain IPOs, FPOs, and then companies, and large number of people try to buy these shares without understanding that there can be some, cartels which might be working on jacking up the prices of these companies. So one need to find out what is happening with these companies. So with that introduction, let me just see how to look at. Yes, please put the slides. You can put the slides.
Rahul, are you sharing or should I?
Yeah, it came now.
Yeah, sir, if you could you just try to share the slides, sir? It would be like much more convenient for you.
I should do it, is that?
Yeah, just try, sir. If there is any difficulty, I'll do that.
Okay.
So, it will be much more convenient for you. That's why. And one of the participants' video is on. Please, everyone, I request you to turn your videos off and put your microphones on mute. Thank you.
It is share contents, right?
Yes, sir.
Yes, sir.
On the top, you have the share contents.
Yes, sir.
Then screen. Because in Teams, I have not done this presentation.
Now you may
Screen or
open the
window?
presentation.
Screen or window?
Both are okay, sir. You may choose window. So the window will be open for you.
Yeah, screen it is not coming, but let me just. I think it should be coming now. Let me just see.
Yes, sir. We can
see.
actually see the entire screen, sir. We can see
You're
your
able to see the screen?
Yeah. Yes, sir.
Then I think I'll put this slides.
Yeah, sure, sir. Please.
Is that visible now? It will come. It will come. Wait for a few minutes. I think it will come.
Yeah, it's loading in the background, sir.
It's loading in the background. I'm seeing.
Yeah, if you just minimize the Teams app, yeah, it will be visible, sir. Like after turning on the video, if you want.
But minimizing this is required. It should come without that also.
So, it might be because you cannot turn on the video when you're presenting. Maybe that's why. We can see. We can
camera
actually.
On. It is not turning on the camera. But
no, sir.
I put on the camera.
You're visible, sir. You're visible now.
Okay. Yeah.
You can just minimize the MS Teams app, and your PowerPoint file is actually in the background.
Okay. It's visible now?
Yes, sir. Yeah.
Is the PowerPoint visible now?
Yes, sir. Sir, if I may, you can just maximize the PowerPoint and go to the slideshow.
That's what I'm trying to do.
Yeah. All right, sir.
It's taking a F5. It should maximize, but it is taking time. Detected graphic card may not be configured properly. Okay, it should be coming now. I think it's coming in the background.
Yeah, it's just loading.
Yeah. Anyway, let it come. I'll keep talking, and when it comes, you will be able to see the slides. So when we are trying to look at the company, we look at different aspects. Normally, everyone who is looking at the company's annual report, we immediately jump to what we call as the financial statements, and those financial statements normally consist of the profit and loss account or income statement. Then we have the balance sheet and then cash flow statements. Now, if you look at the profit and loss account, balance sheet, and cash flow statements, and use combination of different items that are depicted in all these three financial statements, you would be able to make out something out of these things. I'll come to all those, some of the ratios, I'll be highlighting some of the ratios. I'll come to those ratios little later. But before we discuss ratios, there are very interesting facts that come in the financial statements. At least in the first initial few pages of the financial statements, if you start looking at the financial statements, there are what are called as different reports. It may not have statements, but then different reports. And these reports are put out by the managements. Now, who are these managements? In finance literature, we talk about the owners of the company and then the management of the company. Normally, if I am running the business as an owner, I should be putting out the results of the company, and then I should be talking about this company, what is happening with this company, and I should be highlighting the entire operations of the company maybe for the last financial year. But in the case of a company form of Organised, the owners of the company are located in different parts of the world, usually different parts of the country, but not necessarily within the country. They could be located in different parts of the world. Therefore, the ownership lies with people who are dispersed. Yeah, it's not coming. It is simply
it's
taking
okay,
rounds.
sir. That's all right, sir. If you could just stop sharing content, I will just share the slide for you. You just need to open the Microsoft Teams app and stop sharing content.
But it is showing stop presenting. I'll put that exactly. Stop presenting. It's taking such a long time.
Have you clicked the stop presenting, sir?
Yeah, I have clicked the stop presenting. Just wait, it is
sure.
Taking rounds and rounds.
Will do, sir. No problem.
Hello? Yes, who is speaking? I'll call you maybe in the evening. Is it okay? I'm in a session. Huh? After. Yeah. Rahul, is my voice audible? Rahul?
Yes,
Yes,
sir.
sir.
You're audible,
Yes.
sir. I'll just present the slide.
Okay. This.
Yeah. Is it visible, sir? Is it visible, sir? Hello.
Okay. If my voice is audible, I'll go ahead.
Yes, sir. You're perfectly audible. Yeah. Please go ahead.
Yeah.
Just tell me to move on to the next slide when needed, sir.
Yeah, I think now it's clear, but I'm not able to see the slides. It's okay, let it come. So there are certain writings by various people. One of those people is the management. As I was just now telling, in the case of company form of organization, since the ownership is dispersed and the owners who are the shareholders are located in different parts of the world, they entrust the entire responsibility of running the company to the team called as the management. So it is this management which puts up these types of reports. And these managements are headed by what we call as the board of directors. Therefore, when somebody is looking at the financial statements, I would suggest that you please look at the reports by the board of directors, and reports by the board of directors as a mandatory part of the SEBI regulations and Companies Act regulations and various other regulatory bodies in the country. Board of directors will have to put out certain types of reports. So I would always suggest that you should, in fact, look at these reports, because sometimes what is not highlighted and what is not understandable by looking at the balance sheet, your cash flow statements, and also the profit and loss account may be visible in very small font in the director's report. So I would suggest that you should be looking at the director's report. That's number one that you should be looking at. We will just see that I put on the slides what are the contents of the director's report. If it does not come, I'll tell what will be the contents of the director's report. Then another thing that we should normally be looking at in the financial statements when we open these financial statements is the auditor's reports. Auditors will give the entire report of how the financial statements are being prepared and whether the financial statements, to put it in the language of commerce and management, true and fair view of the financial affairs of the company. So auditors would be putting all these things in their reports. So if you are looking at the financial statements of the company, you should in fact read the auditor's reports. Sometimes the auditor's reports may qualify a financial statement. What do you mean by qualifying a financial statement? If they are not satisfied with the way in which a particular item has been treated in the financial statements of a company, they would say this the way in which the item should have been treated, but the item has treated it this way. And auditors would also highlight, if it was to be treated in this way, the of the revenue, profit would be so much, EPS would have been so much. So these types of qualifications, if it is there in the financial statements of a company, I would always suggest that you take a look at the auditor's reports. I know that all the investors may not have the wherewithal, may not understand the details of the auditor's report, but at least some of the highlights. Because if there is a major deviation, auditors will definitely point out how these major deviations have occurred. Therefore, one is the financial statements. Now the slides are visible. I hope you are able to see. Can one of the participants unmute and then tell me whether you are able to see the slides? One of the participants, quickly.
Yes, sir. Yes, sir.
I would like, yeah, okay. Yes, the heading is how to look at a company. This is even before the board of directors, how do we look at the company? Now, I have asked series of questions, and each question can be discussed for one full day, but let me just give the glimpses of these things. What is the business of the company? So you should understand in what business this company is and whether the products of this company are sustainable, how the demand for the products are, and who are the competitors. Next, what is the business model of the company? That is, we are talking about maybe the cash flow, say revenue model of the company, expenses model, and then the profit models of the company. There are different models, business models for the companies. You should be looking at the business models of the company. Just to cite a very recent example of how the business models need to be looked at, I hope all of you are familiar with the mega IPO that India experienced very recently, 18,600 crores. of a company which is in the fintech industry. Anyone from the participant side who can tell me what is this mega IPO that we recently had? Any of the participants? The size of the IPO was 18,600 crores. Anyone? Okay, let me tell this. This is, yes, that's right, Paytm. And the company had priced this issue at 2,150 rupees. On the debut day, the prices nosedived, and they were expecting that the prices will come down to 1,200 rupees. Just imagine what would be the feeling of a person who has applied for the IPO and who got the allotment for this company's shares. So when you are looking at this, just look at what is the business model of the company, how are they going to derive the revenue, what is the way in which the company need to incur the expenses, and then how the profits will accrue to the company. Then who are the promoters, whether the promoters have experience in this or first generation or second generation promoters, and whether they have been running some other companies or even other businesses. So that's the way. And what is the industry in which this is operating? I'm especially putting this because there are certain industry groups which are not favored at the international level. For example, today, if you are talking about the energy companies, everybody is talking about the green energy, clean energy, and UN has also mandated that you should opt for green energy rather than fossil fuels. And therefore, if somebody is in the fossil fuels industry, naturally, it's not going to be an industry which will thrive for a long period of time. You have to look at that. What is the general ROI of the industry as a whole? Return on investment of the company is different, and return on investment of the industry as a whole is different. If the ROI of the industry as a whole is very high, normally expectation is that the ROI of this company should also be good. And that's one of the things that you should look at. What is the level of competition in the industry? I hope you can understand that. And then what are the exit and then entry barriers? Can we go to the next? Please move the next slide. Move the slide. Yes, United Nations organization has put this SDG. What is SDG? Anyone who can come online and tell me what is SDG and the outlook for the company? SDG stands for Sustainable Development Goals, and I gave the example of green energy and clean energy. Then who are the competitors? Whether the competitors are within the country or they are MNCs. So how are you going to tackle this competition? International and not say national market for the company. What are the raw materials and finished goods of the company? Company's policies towards government policies towards the industrial products, and then whether the products of the company can be easily substituted by some other products. It is important for the pricing of the product, and therefore it has bearing on the EPS and then profits of the company. Therefore, this products and substitute. Yeah, can we go to the next slide? Now, what to look for in financial statements for investment decisions? What I have done is I have taken the example of one company and then tried to highlight what are the various things that you can look for. But these are only general things. When you look at another company, this is which is in the information technology, and therefore I have put some of these highlights. You can take a look at that. If the company is in pharmaceutical industry, the way you look at it could be different. If the company is in banking industry, the way you look at it could be different. This is just an example that I have taken. Can we go to the next slide? Yes. This is from the latest annual reports of Infosys Technologies Limited. Navigate your next. Infosys, navigate your next. This is the title for the annual report of the company. Now the headline, which they are given just below this, is Cloud Chaos to Clarity. Now what it highlights is we are going to give the clarity from the cloud chaos, navigating towards cloud clarity. clarity. Again, this is the way the emphasis is, highlighting their annual reports. Don't trust, don't just lift and shift, uplift experience, shift value. That's cloud clarity. That's the way they're expanding. And emphasis, cloud is called Cobalt, your cloud navigator. And then they are trying to highlight what are the various ways in which the company is likely to get its business. If there is time during question answer session, I'll just explain these things in more detail if it is necessary. Daimler AG, they are quoting from Daimler AG, hybrid cloud infrastructure to shape new experiences. From the reports of Daimler, they are quoting this. Then Vanguard, advanced digital transformation with secure cloud adoption. This is again, they are quoting from Vanguard. Daimler, I hope all of you know, it is one of the world-class automobile companies. Vanguard is a company which is keeping the records and billions of the people in the US and also around the world. Yeah, next one. Next slide.
Practical record ulla pillirundallo. Adingal vanittu ee saana edakku idana. Okay. Practical.
Okay. They are quoting again from Reckitt. Intelligence on cloud to power next generation outcomes. Microsoft Corporation, Microsoft Corporation delivering data to drive in-depth support for cloud solution. Live person riding the cloud for growth acceleration. Now, why I put all these things is, see, when we directly look at the financial statements of a company, we may not know what type of business is likely to come in the way of emphasis. If you look at the annual reports of the company, they are in fact quoting all these. Live person, Microsoft Corporation, Reckitt, these things they are quoting just to highlight the way in which the business growth is likely to happen in future. Yes, next slide, please. Now, contents of the annual report. These are all the contents of the annual report of Infosys. Future of enterprise, driven by hybrid work, digital acceleration, and cloud. And this is what Nandan Nilekini claims. Letter to the shareholders, that is another content. And why I'm asking you to read this letter to the shareholders. Sometimes if the company has been experiencing very peculiar problems, they may not be highlighted in the financial statements of the company, but then this letter may be highlighting this. Sharing an equitable and sustainable digital future. And they explain what is all these things. Now, Infosys board of directors, who are the members of the board of directors of the company, Infosys leadership team, they give the photos of the leadership team, awards and recognitions. Yes, next one, next slide. Then let me come to the financial highlights. Even before the financial statements are presented, the board of directors give what are called as the financial highlights. I call them as glimpses. You can make a look at, take a look at these financial highlights that the board of directors are presenting. And these are the numbers that I have taken from the Infosys. It is 1,472 crores of rupees. Milestone of 1 lakh crore in revenue has been crossed. And they talk about the revenue growth of 10.7%. Operating margin is 24.5%. Digital revenues, that is, they also talk about the segments, business segments of the company, and where is the growth happening. So they talk about digital revenues, which account for about 48.5% of the total revenues of the company. And they also highlight how the growth is happening in the major segment of the business of the company, 31.3% growth year on year on the basis of USD, that is measured in terms of the US dollar. This is the way the digital revenues are growing. So that's the highlight. Free cash flows in crores of rupees year on year, 22,020 crores year on year growth of 44.5 crores. This is in terms of foreign conversion, as a convertibility, foreign currency conversions. Please take a look at all these things. Operating margin 24.5%, there is a difference between the return on investment and then the operating margin. We will see those things a little later. Digital revenue growth, free cash flows. Next one. Again, consolidated cash and then investments. I will not read out the numbers, but these are the highlights that they are saying. Basic earnings per share as opposed to the diluted earnings per share. So they are talking what is the basic. In our commerce language, it is called as the EPS. What is the EPS of the company? And they also talk about the growth of the EPS year on year. 45.61 is the EPS of the company. And then the growth year on year compared to the last year and then last 5 years, it has grown by 17%. Then dividend per share, how much is the dividend declared? 27%, and then the growth is 54.3%. Then they are also talking about what are the large deals. That is, where is the revenue to the company is accruing. So what are the types of large deals that the company had in the last financial year? Is it domestic or at the international level? Next one. Then this notes, the notes also convey very, very important meaning. Sometimes what is not highlighted in the financial highlights and also in your financial statements may be understood by looking at the notes. Therefore, we should look at the notes. Sometimes the notes may be in a smaller print, but that might be a very, very important print. Yes, next one. Now again, the same numbers continued, financial highlights. Numbers in US dollars. Infosys is a listed entity domestically, that is in India, and it is also a listed entity elsewhere, that is in the US market, and therefore they are obliged to present financial statements in the currency in which the company's head office is located, that is Indian rupee. And if the company is, say, quoted, it's a listed entity in some other parts of the world, they have to report those in the currency of the country where they are listed entities. Infosys is a listed entity in USA, and therefore they also report the revenues in US dollars. So you have the revenues in Indian rupees, revenues in US dollar, and almost the same thing they will highlight in Indian rupees and also in the US dollars. Yeah, next one. Again, financial highlights continued. They also talk about the market capitalization. How do we calculate the market capitalization? If it is a listed entity, market capitalization is just the product of the number of equity shares and the price per equity shares. That is, number of equity shares multiplied by the price, that will give the market capitalization. And they are saying that market capitalization of Infosys is 5,82,880 crores. One of the top companies. And to give an idea of the diversity of the employee strength, they are talking about employees. Women employees, 38.6% of the total workforce come from the women employees. This is, next one is proposal for buyback. This is one of the most important things that you should look for. The moment a company announces the buyback, if some of you have been watching in the secondary market, the prices of the companies normally start shooting up. By announcing the buyback, company gives signals to the market. What are the signals that the company gives to the market? One of the signals that the company gives to the market by announcing the buyback is company is flush with cash. They have enough cash. That's number one. Then second signal that the company gives to the market is by buying back the shares from the open market, they are going to reduce the number of equity shares that are in the market. Now, what is the implication of this? If they reduce the number of equity shares in the market, and if the profit growth is intact, cash growth is intact, and then operating profit margin and all other margins are intact, they would give a signal that the EPS of the company is likely to increase because the numerator is remaining constant or it is growing, but the denominator, that is the number of equity shares, it has come down compared to the last period. Therefore, this is another signal that the company gives to the market. Then by announcing the price at which they are going to buy back these shares, it also gives another signal to the market that the current market price of the company is not up to our expectation, and therefore we are going to buy back the shares at a higher price. Sometimes the higher price is announced. Current market price may be 1,400 rupees, but Infosys might say that I am going to buy back all my shares at 1,750 rupees. Then the market responds by showing signals in the upward direction. That is 1,400, the market prices start increasing, because if they surrender the shares to Infosys, they would be able to get 1,750. They can buy it at 1,400, and when they surrender, they can get 1,750. Of course, there are, it's not so easy as it is being put. If there are questions, I'll come back to this. Key trends in line with the capital allocation policy, that is, company will have announced the capital allocation policies, and what are the trends in that. Then they would say that what is the total amount of the buyback and what is the price, 1,750 rupees per share, and they will buy back the shares worth 9,200 crores maximum buyback size. So this is the signal. So it's good if somebody looks at the companies which have announced their buybacks. Yes, next one. This I have put it in a table in the next table, say a slide. Yeah, please move. Please move. I have. Yes, next one. Next. Yes. These are the highlights which, when I copied these numbers and then pasted in the PPTs, they were coming in very jumbled way. Therefore, I rearranged those things by putting that in an Excel sheet. Infosys financial highlights. Just I'm not going to read the numbers, but I'm just showing you all these things as to how one can look at the numbers and how do we understand this. We have 5 years highlights, 2017, 18, 19, 20, 21. These are the highlights for the financial year. You can also look at these numbers Q on Q, that is quarter on quarter. Also, you can look at this half year on half year. You can look at the numbers, but I have put the year on year numbers. So 17, just see what was the number, and then 18, whether the number has increased. That is, the revenue has increased, net profit has increased, earnings per share, EPS has increased, the number of employees has increased or decreased. Just take a look at this. It is 68,484, which goes to 70,000 plus, 82,000 plus, 90,000 plus, and 1 lakh plus. So year on year, if you are seeing there is a consistent increase in all these things, you can convert that into percentage and calculate. You can do that exercise. Again, the net profit of the company, just take a look at this. From 14,000 plus to 16,000 plus, there is a dip of, in the year 19, there is a dip, 15,404. Then 20, there is an increase, and 21, there is further increase. Then how does it convert itself into the earnings per share? You have consistent increase in the earnings per share. Just see, although the revenue had declined by more than 1,000 crores, the dip in the EPS has not been much. It is just about 0.09. It is 35.44 here, 35.53 here. So consistently, Infosys has been showing increase in the EPS. Then how do you read these numbers? Number of employees over a period of time, the number of employees is increasing. Now, one of the ways in which these companies are deriving their revenues is deploying their personnel in different projects. Maybe in India, maybe elsewhere in different parts of the world, and these are the engineers who would be working on different projects. Therefore, the numbers, when you see the increasing numbers, that gives an indication, that gives a signal that the number of projects that Infosys has been getting over a period of time has also been increasing. That is why they are hiring. They are on the hiring spree. So revenue growth, naturally, you can correlate this with the revenue growth. Revenue growth should naturally be accompanied by the number of employees growth. How does it translate into EPS growth? How does it translate into net profit growth? You can look at this. The next slide. The same numbers are available in the US currency, that is dollars, because they are obliged to give all these things in the foreign currency, that is US dollars, since it's a registered entity elsewhere. Yes, I think I'll go to the next one. Now, board of directors highlight the report, financial statements, and then the entire operations of 1 year in different ways. Results of our operation and state of affairs. Under that head, they will say what are the results and what are the states of affairs of the company. Then business description, the company gives the business description. So where do we, I was just telling what is the business of the company. You can see the board of directors report and then see the descriptions that they are given. Human resources management, what is the policy of the company towards human resources management, corporate governance, audit reports and auditors, CSR responsibilities, environmental and social governance, and most of these things are mandated today as LODR, that is listing obligations of the company. They have to, yeah, next one, report all these things. Then annexures to the board of directors reports. There are different annexures to the board of directors. Statement containing the salient features of the financial statements of subsidiaries, associates, and joint ventures. Then particulars of the contracts. So all these things are the annexures, and we need to look at the annexures. Next. Then, the board of directors also give a discussion and analysis of how the company's operations and the revenues and cash flows have been during the year. They will talk about the industry structure and development, opportunities and threats, financial condition, results, and then the outlook, risks and concerns, internal control mechanisms that the company has been having, then material developments in human resources, industrial relations, and then the number of people employed. So MD and A is a very important part of the board of directors. And sometimes something that we don't understand can be seen from management discussion and then analysis. Yeah, next one. Then corporate governance reports, how the governance of the company has been carrying. That is corporate governance philosophy, board composition, that is how many board of directors has been there, how many male, how many female, etc., different compositions. Then the list of board of directors, board and executive leadership composition, board meetings, and then the number of meetings that different board of directors have attended. Then CSR, risk management, and shareholder information. So this is the CG report of, yeah, next one. CEO and CFO certification, that is Chief Executive Officer and Financial Officer of the company, also certifies these annual reports and also financial highlights, including the balance sheet, financial statements, and all these things. The certification, you can just, it's a routine certification, but sometimes either CEO or CFO might qualify. You may have to look for those types of things. Yes, next one. Now we have two different types of financial statements that we come across. One is the standalone financial statements. The other one is the consolidated financial statements. There will be a difference between standalone and consolidated financial statements for those companies which have subsidiaries. If a company does not have the subsidiary and it is operating on its own, then there will not be any difference between standalone and consolidated financial statements. In that case, they will not even present the consolidated financial statements. If a company is having subsidiary, of course, they will present both standalone and consolidated financial statements. So when you look at all the numbers that I was trying to say, that is the revenue of the company, net profit of the company, then EPS, basic EPS of the company, diluted EPS of the company, etc., various financial indicators. We may have to separately look at these things for standalone entity and also for the consolidated entity. Consolidated, they will consolidate all the subsidiaries into a single entity and present that as the financial statements. Standalone, for a company on its own, how does various items look like? That is profit and loss account, changes in the equity, cash flows, and then auditor's report. Yeah, next one. Yes, consolidated financial statements. Again, same things are there in consolidated financial statements also. Yes, next one. Then business responsibility report. Board of directors would also present what are called as a business. It's okay. You can go to the next one. I will not take much time on business responsibility reports. Board of directors will present the business responsibility reports, and sometimes, people who are new to these types of annual reports can see the explanations given by the board of directors, and we can make out that some of these can be understood in this perspective. Now, I'll go to some of the ratios. We have any number of ratios that can be used for understanding the financial statements of a company. But there are certain basic ratios that an investor in the secondary market can look for. An investor in the IPO market can look for, FPO market can look for. This is not an exhaustive list of all the financial ratios, only some I am giving. Now, one of the things that one should look for is the risk profile of the company and then the expected risk of the company's business. Next one is risk profile and expected, previous slide. Yes, expected risk and then the risk profile of a company can also be seen from a financial number. Please understand, financial number cannot give the entire perspective of the risk profile and expected risk. One of the dimensions it can give, and that dimension is looked at by looking at this number DE. DE stands for debt equity ratio. That is, what is the composition of debt and then the equity of the company. Does the company have more of debt and less of equity, or vice versa? And when you look at the debt size of the company, is the debt size of the company disproportionately huge? If it is disproportionately huge, you have to look at the overall return on investment of the company, then the return on equity of the company, return on the capital employed of the company. Now, I'll just maybe highlight one of the happenings in the industry. Just few years before, not long ago, but very recently, say RIL, that is Reliance Industries Limited, was carrying more than 3 lakh crores of debt on its balance sheet. More than 3 lakh crores. So when the analysts were presenting the expectation of the companies, that is outlook of the company for the next year, and the analysis about the risk profile of the company, one of the highlights is company has diversified into many businesses to minimize the risk, but in the process has gone for huge amount of debt, and that debt is disproportionately huge, and they were talking about whether the company would be able to service these debts in terms of repayment of the principal as and when it becomes due, and also payment of the interest. Now, as this was happening in the industrial scenario, in the year 2016, Government of India brought out a legislation, a very important legislation, which has its implications for many companies and many of the entrepreneurs who are in difficult financial position are extremely worried now. The worry which was not present before 2016 started, in fact, from 2016 after the enactment of this piece of legislation. This piece of legislation did not contain anything substantially new, but the legislation has, in fact, sent fears down the spines of many of the company directors, managing directors, and also the promoters. Which legislation am I talking? Any of the participants? Can any of the participants unmute and tell me which legislation am I talking? Attempt. You would be right. You You may not always be right. I was also not always right. Therefore, you can make an attempt. Anyone who can unmute and then tell me quickly. If it is wrong also, doesn't matter. Anyone? Okay, you can keep, yes. Okay, I'll come back to this. Now, once this piece of legislation started sending all types of fear signals to the entrepreneurs, RIL MD chairman started thinking in terms of bringing down the debt levels of the company. That is how Reliance Industries has entered into various deals with the different companies, and they have been able to bring huge amount of cash to reduce the debt levels. And Mukesh Ambani himself has gone on to say that I am going to bring down the level of RIL debt to zero. I'll make this as a zero debt company. That's what Anil Ambani did with reference to Reliance Power, but unfortunately he has not been able to do that. But Mukesh Ambani has been very successful. But the most recent setback for Mukesh Ambani is withdrawing of Aramco, because they have said that in the light of the UN SDG and then the valuations of RIL are overstretched, and therefore they are not going to invest in this. So debt equity ratio, in fact, gives you a glimpse of whether the company is over leveraged, whether they have gone for huge amount of borrowing. That's the next ratio that you can look for. Next, look at the EPS and CEPS. EPS stands for earnings per share. CEPS stands for cash earnings per share. This is one of the most important indicators that the investors in the secondary market would look for. And I just showed how the EPS of the company, that is Infosys, which I just now quoted, is growing year on year. EPS is calculated by taking the numerator. Numerator is net profit after taxes and then the preference dividend. After all the preference dividends are paid, that is the earnings available to the equity shareholders divided by the number of equity shares. That is the formula for EPS. So whether EPS of the company has been increasing or decreasing, that's one indicator. Then you have the cash EPS. EPS is calculated based on the accrual principles of accounting, and cash EPS highlights whether the company which is in profit is having trouble in meeting any obligations because its cash flows are not sufficient to meet obligations, simple obligations like the interest payments. So we also look at what is called as the cash EPS. We expect that the cash EPS should also be higher. If EPS has been growing over a period of time, cash EPS should also be growing over a period of time. Next one is the face value of the shares of the company, whether it is 10 rupees, 2 rupees, 5 rupees, and all those things. Next is the book value. Book value is computed by taking the capital plus all reserves and surplus divided by the number of equity shares. That's the book value. And we again look at the year-on-year growth of the book value. Is the book value growing? I was just telling about the example of Infosys, where the Infosys is going for the buyback. One of the implications of the buyback would be book value is likely to increase if the profit is increasing and then revenue has been increasing. So book value would also increase, EPS would also, other things being equal. Please understand, don't ever think that because the company has gone in for EPS, say buyback, all these things will automatically increase. No, if revenue growth is intact, then the profit growth is intact, and then the expenses are not disproportionately increasing, the growth of expenses or declining expenses continue in the same way, then we expect that EPS should be increasing, cash EPS should be increasing, book value should also be increasing. Next thing that we look at when we are investing is book value. Very high book value is a positive signal, fine, but then has that very high book value been recognized by the market? By looking at price to book value, that is the ratio of price divided by the book value, will give an indication of whether this company has been overvalued by the market or is it still an investment candidate. Now, how do we look at this? PB ratio of the industry as a whole need to be seen, and then you compare what is the PB ratio of the company. Other things being equal, one of the rough indicators is if you look at the PB ratio, price to book value ratio, and if the number is less than 1, I am qualifying my statement. If everything, business model, everything is intact, if the number is less than 1, definitely that is a company which is likely to appreciate, prices are likely to appreciate, and we should really be going for those types of companies. But you rarely find a company, especially under the current market conditions, where price to book value ratio would be less than 1. So invariably it would be more than 1, that is price to book value would be more than 1. But whether the numbers have been increasing over a period of time is one of the things that you need to look for. Yes, next one. This is another important, when you look at the analyst statements and also analyst report of the companies, this Ebitda is one of those numbers which are being highlighted by most of the analysts. What is this? In our commerce classes, normally we talk about EBIT, earnings before interest, and then taxes. It is just to neutralize for the capital structure of the company that we look for EBIT rather than the net profit of the company, because net profit of the company is subject to the capital structure ratios, and therefore the EBIT, that is earnings before interest, taxes, depreciation, and amortization. Why before depreciation and amortization? In fact, depreciation and amortization are non-cash expenses, and therefore we add back these numbers to the net profit. Then tax neutrality we want to find out, and then the capital structure neutrality we want to find out, and therefore add back this interest also. That is earnings before interest, taxes, depreciation, and amortization. Ebitda data. This is to be seen year on year. What has been happening to this company's Ebitda year on year? Has it been increasing over a period of time? Increasing Ebitda number is an indication that the company has been doing well. Next number that we look for is the PE ratio, price to earnings ratio. How do we calculate this? Price divided by the EPS. So when we look at the price divided by the EPS, it tells us how many times the market is valuing the earnings of the company. That is, if P ratio, let's say, is 10, and it's a P ratio of 10 tells that earnings of the company, let's say by taking a numerical number, earnings of the company may be 1 rupees, and then price per share may be 10 rupees. So EPS is 1 in the numerator, price is 10, 1 by 10, 10 by 1 will give me the number, P ratio is 10. So it tells how many times the market is prepared to value the earnings of this company. Now, normally we'll look at the industry ratio and compare it with the company ratio. But we go beyond that. That is, we look at this company with its equivalent peers. Exact equivalent peers may not be available, but immediate peers we compare and then see. See, if the P ratio of the company has been very high, it is an indication that appreciation of the price is not likely to happen. But please note, you have to look at various other things also. P ratio sometimes could be very high because the revenue of the company has been growing very fast and then at a very high rate, and then the profit of the company might be growing. Then maybe company has gone in for some products which are new and they are likely to give very good profit to the company. So please take a look at this. Next one is the PB. Just now I told you what is the price to book value ratio, and therefore I will not get into the details of that again. This is ROE, return on equity. This is for the equity shareholders, how much returns this company has been giving, especially when somebody is looking at the investment in an equity share of a company. We look at these numbers. And then ROCE, that is return on capital employed. Here we are taking only the equity shares. Here we are taking the total capital employed without making a distinction between whether it comes from the equity source or debt source. Then the enterprise value, how much is the value of the enterprise, especially when somebody is buying a stake. Let's say Armco is buying a stake in Reliance Industries. So it will just value the company as a whole. What is the enterprise? And if I'm taking 5% stake in this company, how much I should be paying? One of the important disagreement between RIL and Armco, on which Armco has withdrawn its offer to buy 5% stake, is this enterprise value, because Armco has been arguing that based on the UN SDG and also various other prospects for the industry, which is based on the fossil fuels, is that the enterprise value is quite high for the numbers which the RIL has been asking. But the RIL has been defending its enterprise value. Armco is not in agreement with that, and therefore the deal has been called off, at least for the time being. Then the growth prospects of the company. What is the growth prospects? How is it likely to grow? And whether the company has been growing organically alone or inorganic growth, or is it a combined growth of organic growth and inorganic growth? We look at those things. Then who are the clients of the company? Small clients, big clients, and whether the clients are being added every year. This is yet another numbers which may not be available in your financial statements as such, but definitely in the auditors, in the director's report, these numbers will be available. For example, in the case of Infosys, I was just showing how one of the big ticket deals has been won, and they say that these are the clients who have been added. Then we look at various ratios. I have not listed all those ratios, but different turnover ratios. For example, if somebody is interested in knowing how well, effectively and efficiently the fixed assets of the company have been used, you can look at the fixed assets turnover ratio, working capital turnover ratio, current assets turnover ratio, debtors turnover ratio, creditors turnover ratio. Some of these turnover ratios you can look at, but some of these basic things that I have discussed are the ones which are normally looked at by the investors who are taking decisions to buy or sell in the secondary market. But if you are interested in the fundamental analysis and want to make an investment in the long run, that's what Professor Kevin was talking about in the morning session when he said you should go for the long-term investment rather than the short-term investments. But of course, that depends on the risk appetite of the people. There are people who interpret long-term as 1 day is long-term for me, 5 minutes, and then 9 hours, 10 hours is good enough for me. That is, we have the day traders who try to buy and sell on the same day, or sell on the same day and then buy back on the same day. So different, it depends on the type of investors. So we have the turnover ratios, and then we have different profitability ratios. One of the profitability ratio I have just shown the net profit of the company. But most important thing that we look for is the operating profit ratio of the company. Operating profit, why operating profit? Sometimes the net profit may be a misleading figure because net profit may come from different sources. Even when a company is not in a particular line of business, but they have entered into some type of deal for a specific financial year, net profit could increase. Therefore, what we look for is the operating profit. What is the usual lines of business of the company and how the revenues and profits have been accruing to this company from its usual business. That's where we look for the operating profits of the company, growth of the operating profits of the company, then operating profit to the sales growth of the company. And if somebody is interested in finding out operating profits of the company divided by the number of shares, that is how much of operating profit company has been generating for every one equity shares can also be seen. Although these are not highlighted, but if somebody is interested, you can look at some of these numbers. Now the debt and equity as a whole, you have the capital structure ratios, but these days, especially when this important legislation came in 2016, entrepreneurs are extremely worried because if you have a debt which is outstanding, that is principal has not been paid and then the interest has not been paid, then if the financial creditors refer the company to a particular term, which I use if nobody tells, refer to this, then the company may be referred to some type of winding up, liquidation of the company. Therefore, people are extremely worried. So if you look at the corporate world today, companies are in spree to reduce the level of debt. Anil Ambani has recently given this statement that he would like to bring down the level of debt in Reliance Power. But 3 days back, the news is Reliance Power has defaulted on the payment of interest. Reliance Infra has also defaulted on the payment of interest. They have not been able to pay the interest because the cash flows have not been sufficient. But they still have the objective of reducing the debt because the trend has been set by Reliance, led by Mukesh Ambani. So if somebody looks at the entire balance sheet and then see the level of debt and whether the debt is justified by looking at the entire asset structure of the company. So one sees whether you can justify, then one also sees what are the cash flows, whether you have enough cash flows to meet the obligations. Simple obligation is the interest payment. So if you do not have enough cash flows, you will be defaulting on interest payments. And today, interest payment default has its immediate implications. Unlike in the earlier cases where the cases could be dragged for years and then decades, now this type of dragging is not possible. If the company owes more than 2,000 crores of debt, the debts have to be cleared within 180 days of default. Otherwise, it will be referred to this particular code, which was enacted in the year 2016. And you have to see whether the company that you are looking for to invest has at any point of time referred to this particular code and whether any proceedings are pending before this. So if it has been referred to this, it's an indication that company is in deep financial crisis and therefore this needs to be taken care when you are looking at the price of the company. I'll just cite one example. In the year 2008, I don't know whether some of you remember, Reliance Power came out with a public issue and within 60 seconds of the issue opening, more than 10,000 crores of rupees was garnered by this company. Within 60 seconds, please understand, of opening of this. If I am right, the price was about 350 rupees. 10 rupees was the face value, 340 rupees was the premium, and 350 rupees is the issue price. So it was oversubscribed several times because the company is coming from the stable of Reliance Group. It was an overwhelming success at that point of time. People were expecting that the prices will shoot up and go beyond 1,000 rupees. If you look at the price as of today, if you compare in the immediate past, the prices in fact have increased. But what is the current price? Current price, I didn't see today's price. It is about 12.75. Issue price in 2008 was 350 and today the price is around 12.75. It came down to 3 rupees. Now it has improved from 3 rupees to 12.75. Maybe 12 to 14, that is the range in which this company has been quoting. You have lots of companies like you have Reliance Communication, which was the darling of the market one of the days. It is in the same fate. And you have the Reliance Capital, Reliance Power. Many of these companies are in big trouble because of the type of debts which they have been carrying on its balance sheet. So one needs to see what is the debt of the company and also compare it with what is the market price of the company. Can we go to the next slide? I think I'll give some time. I will not set the time. It is the participants who can set the time for discussion. We have another number, 52-week high-low. This is an indication. Is the company's price going towards the 52-week high or 52-week low? Consistently, is the price decreasing or is the price increasing? If the price has been increasing, look at the reason why the price has been appreciating quite fast and why the price has been declining so fast. If the price has been appreciating so fast and declining so fast, is it accompanied by the volume or are the prices being moved without the volume? So is there price and volume movement together? Next thing that we look for is the stake of the promoters. Whether the promoters have confidence in the company which they have started, promoted. And do they continue to have the same type of confidence? How do we look at that? What was the promoter's stake when they started this company? And over a period of time, how the promoter stakes have either declined or increased. Increasing promoter stake over a period of time is normally a positive indication for the market because the promoters themselves have confidence in the growth prospects of the company, and declining promoter stake is a negative signal. I'm again qualifying. This is not the only indicator, but other things being equal, this is the way one can interpret. And what is the total equity of the company? What is the total reserves of the company? And what is the total number of shares? If the equity base of the company is very low, it gives a positive signal to the market. Why? Extra revenue accrues to the equity shareholders of the company. If the equity base of the company is huge, then EPS gets diluted. That is, EPS comes down. If the equity base is very low, EPS of the company normally gets boosted. But of course, it comes with a rider clause. How does it get boosted? Company can go for debt financing, but debt financing has its own implications. But if the overall return on investment of the company is quite high, very high, and then company goes for the debt financing, normally the remainder accrues to the equity shareholders. Therefore, we normally look for the equity base of the company. Lower equity base is a positive signal. Very high equity is taken as some type of a negative signal because whether the company would be able to earn so much of revenue, earn so much of profit to maintain the EPS of the company. That's equity. Then the reserves, other things being equal, we see higher the reserves, better is the prospects of the company. But we now, because of the type of liberalization and then the pricing that is happening in the equity market, we look at the reserves by bifurcating this into two main parts. Are the reserves coming from the plowback of the previous profits, or are the results the result of pricing in the secondary market? For example, Paytm. Paytm issued its equity shares at 2,150 rupees. So if you look at the total reserves, huge amount of reserves come from share premium. So today we look at the reserves which the company has plowed back by way of earning profit and then the share premium. If much of it is because of the share premium, then one need to see whether the reserves of the company can be sustained. Then you have the number of equity shares. Of course, equity base will determine the number of equity shares. Equity base, then the face value will determine the number of equity shares. So if the number of equity shares is relatively less, then the EPS is likely to just get boosted, cash EPS is likely to get boosted. Please understand, if the revenues do not get affected negatively. So that has to be kept in mind. So there are various other indicators also. I think I would stop it here and then next slide. I think that might be my last slide. So any addition, clarification, any questions are most welcome. And before you ask any questions, which is the piece of legislation I am talking about, 2016. And it has really affected major industry groups. And I'm sure the first generation entrepreneurs like Ruyas are in tears because of this legislation, because one of their flagship companies had to be sold. Because it was referred to this particular legislation, that company is no more with them. I'm talking about SR Group. SR Steels is now not with SR Group. SR Oil is not with SR Group. Major stakes have been taken by somebody else. Which legislation am I talking? Anyone? Okay, all right. Yes, questions? Any additions, clarifications? As I already told in the beginning itself, it's not possible for me to cover everything in 1.5 hour session. But if you have any specific issue and question, I'll definitely highlight. Anybody? Somebody wants to add, you're most welcome to do that.
So if anyone has any clarifications needed or any additions to be made, if you have any problem with like directly asking sir, you can also mention that in the in-chat message box. Thank you.
Good afternoon, sir. May I?
Yes, good afternoon. Yes.
My name is Susan Abrams, sir. I'm from Christian College, Changanur. I'm not from the commerce background. So my question may be a little layman.
No, that's fine. Everybody is a layman. Yeah, go ahead, Susan.
Okay, sir. Thank you. So my question is, sir, you have talked about a lot of ratios when investor or a prospective investor evaluates a company. Yeah. So the order in which you have given the ratios, is there a particular order, have you just listed it? Because I ask because there are so many ratios. For a layman investor, it is not really possible to look at all these ratios, isn't it? So would there be a certain bunch of ratios that they would first look at to get in other words, is there a shortcut to for the ratios?
The immediate response is there is no shortcut. But fortunately for all of you who are not from the commerce background, there are analysts who analyze the company. You don't need to do the exercise of number crunching. They do that exercise, huge amount of exercise they do, and they analyze the company, they give a report about this company. And normally these reports contain the types of ratios that I have put. For example, earnings per share. They analyze and say whether the earnings per share has been increasing or decreasing. Debt equity of the company, then the cash earnings per share of the company, PE ratio of the company, PB ratio of the company, book value of the company. Analysts, in fact, analyze, compute these numbers, and they give you these numbers. So those who cannot understand the financial statements of a company can go and read the analyst report about a particular company. Please understand, but you should definitely take some time off, and then before you jump into the conclusion of whether you want to enter that company, that is invest in that company or not, please take a look at some of these basic numbers. And these basic numbers are given in the analyst reports. Like I gave those numbers, there is no particular order in which those are given, but normally the revenues. What is the revenue of a company? That needs to be told, because as an ordinary person, you can understand whether the company's income revenue has been increasing or not. Then what is the next? Company's profit, whether the company's profit has been increasing or not. Then they get into the basics like how do those numbers translate to an investor, like an equity investor, like your earnings per share, cash earnings per share, price earning ratio, price to book value ratio. So these are certain numbers. Ebitda data. This Ebitda is also computed and then given. So this is see, price earning ratio is a number. Ebitda is a number denominated in Indian rupee if you are putting that into an Indian rupee, or dollar if it is a listed entity in, let's say, the US market. So that is in the currency. Price earning ratio is in pure number. Pure numbers can be compared between one company and then another company. So as an investor, ordinary investor, you can look at some of these analyst report basically to understand some of these things. And if you do not have access to analyst report, you have large number of websites where the sample reports are available. So Geojit, for example, gives their analyst report. If you have been a member who has registered, that is, if you have the demat account with them, trading account with them, they do this business, basic business of analyzing a company, and they will also give the reports. But of course, the investment advice is you may have to take your own decision whether to invest or not. But is it worthy of investing? They will tell you whether it is worthy of investing. And after some time, maybe after 6 months down the line, if the company has not been doing well, they might even say that you may have to exit because at that time the scenario was this, at this time the scenario has changed, and therefore you may have to exit this. So these analyst reports are available in different websites. If you go to Kotak, it is available. Geojit, it is available. Money Control it is available. You have a large number of mutual funds which also give these numbers. Yeah. Susan, did I answer your question?
Okay. Yes, sir. Yes, sir. Thank you very much, sir.
Anybody else?
Participants, please do understand that this session can only be fruitful if you also interact with it.
Sir, I hope you have no other questions in the session.
If there are no other questions, then you can. I was expecting that people might be interested because it is on the personal finance. More things can come out in the discussion stage normally.
Yes, sir.
Now, the best way to learn the investment techniques is to invest. Otherwise, I don't think you can learn. You cannot learn swimming based on the advice given by somebody. And what is the price you would be paying for this? The price you would be paying is the losses that you would incur by investing. So that is the price, and that would be your tuition fee.
Sir, if I may ask one thing.
Yes.
This is Rahul here. Sir, there are a lot of investment apps which are available in the market regarding mutual fund investments and so other. Some of them charge brokerage, some of them other charge provide them with some charts and details. So, what is your general opinion about them? Like, should we directly head to a stock exchange and deal with a broker, or is it much more convenient, or is it much more reliable to use those apps?
you know, you have different, I also keep getting many phone calls. These phone calls are normally related to the day trading. Sir, we will give you the highlights, we will give you the tips, and then perhaps you can buy, sell, and if you make profit, so much of profit for us, and you can retain 2/3 of that, 1/3 you can share it with us. Then they will, in the morning, they will give a call, buy this at this rate and sell this at this rate before the market hours close. This is day trading. And I normally do not indulge in day trading for two reasons. One is, see, on day trade, it depends on the market condition for day trading. There is no guarantee that you would earn profit. The second one, I really do not have that type of time to watch it on maybe minute to minute, second to second, every 1 hour. I don't have that type of time. Therefore, I don't indulge in this. When you get this type of tips and say, I would like to do this, my only suggestion to everyone is, they might give tips, but you should also do your exercise. The most important thing is, you should do your exercise. Some basic exercise of, if somebody gives you a tip, understand what is that company, what is their business, and some of these things before you jump into the conclusion. So when you make that investment, just understand how that company has been doing. When people made investment, let's say in Paytm, by paying 2,150 rupees per price, and people made investment around Reliance Power by paying, of course, there was some discount for the retail investors by paying 350 rupees. Reliance Power had not produced a single unit of power when they came out with an issue. And Paytm has not earned even 1 rupee profit when they came out with this type of premium issue. So you need to look at some of these things. I'm not saying that because they have not earned profit, it is not a profitable venture. I'm not saying that. They may have reasons, but one need to look at those things. Some basic numbers you need to look at. Nobody is perfect. You may go wrong, but understand over a period of time, you would definitely come to know how these companies have been doing and what is the line of business. Of course, many of the power producing companies in India have incurred losses because of various reasons. One of those reasons, Reliance Power, if you take, Adani Power, if you take, they acquired huge coal mines in Australia, which is supposed to have the superior quality of coal. But because of the environmental protests and various other things, the contracts had to be closed, cancelled, and some of those agreements had to be postponed. And just last week, there is some type of a news that Adani Power has been able to ship coal from the Australian coal mines. So for a prolonged time, if you have this type of disruptions for various reasons, the company's prospects may be affected. You need to look at those things. If a company has made investment, let's say in Australia, everybody knew that there are huge risks in making investments in Australia. If you have used that business model of, let's say, you build, operate, and transfer model. Let's say you take building of a highway, and then what is your revenue model? Your revenue model is toll collection based on the number of vehicles that pass through that particular road. And if you know that those toll collections are not possible because of the political instability, and then there are risks involved because of various reasons like the ethnic groups protesting, terrorist groups, bombing and all these things, there are very high risks. So one needs to look at these numbers. This is my advice. There are large number of apps. Yes, true. Especially, technical analysis, they will simply show, okay, this is the way it is going, buy here, sell here. Yes, there are people who are experts, and then I think we need to do our basic exercise, homework.
Thank you so much, sir. I request if any other participants, we are moving on to the end of the session. So if any other participants has any queries, any additions, or any clarifications, please do come forward.
If there are no questions, that is an indication that they have not made investments and lost their money. Otherwise, there will be a lot of questions. People will throng for these types of sessions.
Yes, of course. Some statistics
Yeah.
which came several years ago, it's like more than 95% of Indians doesn't invest. They're still going on with saving.
Yeah. Yes.
So, shall we wind up if there is no further questions?
Yeah, just another example, Zomato also came out with an IPO recently. Until now, Zomato has not made even a single rupee profit. But Zomato issue was a resounding success. Yeah. Yes, Rahul, please go ahead.
So that was a wonderful and insightful session by Professor Dr. T. Mallikarjunappa on how to analyze the financial statements for investment decisions. Honestly, I think everyone with a basic commerce background, or at least who has know, or at least who have taught or come across these subjects, we know that we should understand that these subjects. I think I have attended 1 or 2 sessions of Mallikarjunappa sir before. Usually, the crispest sessions that sir deals, it's like 5-hour sessions. It's one entire day. It starts around 9:30 and goes to around 12:30, 1 o'clock. And sometimes in the afternoon sessions, I do remember one session which started at 2 o'clock, and it was meant to be wound up by 4:30, but it went on like 5:15 because there were so many queries and clarifications, and so it's simply not possible to deal or cover the entire subject in a matter of in a couple of hours. It is actually, Sir said, each topic in the first slide actually on each topic, Sir could speak about it for about a week. So so keeping that session very crisp and confined and concise, it's a very challenging job, and it was only possible because such a scholarly person has been our resource person, Dr. T. Mallikarjunappa. So I thank our resource person, Dr. T. Mallikarjunappa, in the name of myself and the department and the whole team, the EQAC and Sree Sankara College, and in the name of UGC Sree. And I thank all the participants for cooperating with us and listening to the session. I think you have had insights, good insights about investment. So I hope everyone also starts investing after this session. At least they start doing their exercise and homeworks with much more investment decisions, even in teaching also. Like Sir mentioned, it's not possible to teach about it, or at least it's not possible to teach about it efficiently or talk about it efficiently unless you actually invest into it. That's the the only way to learn swimming is by jumping into the river, right, Sir?
Yeah, that's right.
Yeah. So thank you so much, sir.
I remember, I used to handle international financial management when Professor Francis Jeranilam was the director of St. Albert's Institute of Management. He had requested me to handle sessions on international financial management. I used to normally, because I used to come in the weekends, 8 hours. So I had made this condition earlier. I cannot come every day. Weekends I'll come, but you should ask the students to sit for 8 hours in a single day. And that was agreed by the students. So I used to start at 9 o'clock in the morning and go on till 6:30, sometimes 8 o'clock in the evening. But online sessions, that is not possible because,
Yes, exactly.
looking at the screen, it's extremely difficult to be online for such a long time.
It doesn't give the grace of that face-to-face interaction when you're having with the participants. Yeah.
Yes.
But still, it's been wonderful.
And I used to tell them, especially in the afternoon session, I used to tell them, if somebody feels that you want to sleep very badly, you want to sleep, I used to give the liberty. You can go to sleep, no problem. But you should promise me that occasionally you should find out what is happening around you, because there are so many people, 50 people in the class, and then the teacher is shouting at the height of his vocal cord. And if you are able to sleep, you are the happiest person around the world. Otherwise, you can't sleep so comfortably. So that used to keep them live. Okay, they used to ask many questions. Yeah. So thank you, Rahul.
Thank you so much, sir. Thank you so much for your valuable time. Thank you.
Thank you.
Thank you, sir.
I
Thank you,
request
sir.
all the participants to fill the feedback form which has been mentioned in the in-chat message. And thank you all for your cooperation. Thank you, sir. Thank you so much.
Tomorrow, whose session is that? Huh?
VK Vijay Kumar sir from Geojit.
VK Vijay Kumar. Okay, Geojit.
Yeah.
That's the first session, sir.
That is in the morning.
Yeah, that's in the morning. And in the afternoon, it's dealt by Dr. Diana and Isaac. She's a professor and HOD in the Department of Commerce and Management Studies in MA College, Kodamangalam, Marathanish's College.
Okay. Yeah. Vijay Kumar session, if I find time, let me see, I'll enter.
Sure.
Yeah, we'll be honored, sir.
We'll be very honored.
Yes, fine.
Thank you, sir.
Thank you so much, sir.
Thank you.
Thank you.
Yes. Maybe after the pandemic, I don't know, we are saying after, when that after will come, we don't know. We would like to visit. In fact, I am in Kerala. I wanted to explore many places in Kerala along with my wife. But unfortunately, when we are in Kerala, we are not able to visit places.